I would describe it, Wilfred, as a lot of uncertainty, as some of your previous guests have been talking about. I think people are looking for these tariffs either to be implemented or not, obviously, by tomorrow. I think that Bob Pisani hit the nail on the head. I think the market's pricing for this perfectly. I think it looks like we won't get a deal done, but we won't not have a deal in the future either. So that's kind of the way it looks like. When I look at what's going on here at CME, we've seen a tremendous amount of volatility. This week alone, we're managing about $2.6 trillion of trade so far to date. That's up about 21% from any given day of last month. So you can see there's an uptick in trades associated with it. Our equities have been exploding. They've been all over the map, as you can imagine. We just launched a new complex this week in our micro complex, which has traded over 1 million contracts in 3 days, which is extraordinary. And then we're sitting on 137 million open positions, Wilfred, which may not sound like a lot, but that represents roughly $22 trillion of notional value of trade. So you can see there's a lot of people sitting in CME's walls right now and in our clearinghouse and using our products to manage this risk. So very interesting. And then if you look at some of the agricultural products, you got corn down to roughly 10% year over year. You got soybeans down roughly 20% year over year. So I think there's a lot of different factors going on, not only just with the financial side, but on the agricultural side for the community that the president is very near and dear to.
You've also, Terry, got a good feel for some of the traditional safe haven products, with Treasury futures and foreign exchange and all of that. I mean, how severe would you say the move is right now for flight to safety in the last few sessions?
I wouldn't say it's severe in a flight to safety right now. We've seen so much volatility. As you know, when you look back in February of last year when the VIX exploded on that trade. So we've seen a lot of volatility in our history. So I wouldn't say there's a big flight to quality. You see the gold markets, you're not seeing them rush into the gold like you historically would on a flight to quality versus some of the other products you outlined. So I think we're seeing most of the trade focus around the equity complex right now. And when you look at the interest rate complex, it's carrying record open interest, but the movement is nowhere near what's going on in the volatility with the equity market.
We've still got Jason Trennert, of course, on set with us from Strategas. Jason, when you do see the moves we've seen in yields, it's implied as a sort of bearish factor because flattening of the curve, banks are trading lower. On the flip side, could it be framed as a positive if rates stay low, equities are attractive?
I think so. This is it. I think TINA, the whole TINA thesis. I think we moved away from that over the last year and a half because
no alternative to stop.
There is no alternative. Yeah. I think we moved away from that because you've had very stimulative fiscal, regulatory, even monetary policy. Trade not as much, obviously. So that's still very much there. If you have $9 trillion in sovereign debt around the world that has a negative yield, it's very, very difficult to even fade the S&P 500 at 17 times earnings when 10-year Treasury yields are 250. So there's just not a lot of options for people. And so I think it's not particularly great for bank profits. I think that's true. But banks actually did pretty well in the first quarter. And again, we're expecting the curve to steepen by the end of the year.
Terry, I've known you for a long time. I know you have political views. I'm curious, as a CEO, what do you think of President Trump's strategy here to go tougher on China, knowing that the U.S. economy is doing much better than the Chinese economy, so he's got the leverage there, and off of what he said, which is they broke the deal?
I'll be very careful what I say here, Sarah, but, one of the things that I've been saying for quite some time, I think that the trade issue is obviously it's very important. We're talking about a trade deficit that we have with not only China but other participants around the world that we have to get in line some way, shape, or form. But I think the intellectual property issue with China is just as important, and I think that's taken a bit of a backseat, and I would like to see the president focus on those issues because that's really what's going to create growth for not only companies in the U.S. but around the world. So I would hope we could get that issue behind us as well as the trade issue. So when you're looking at potential tariffs going to 25% by tomorrow, what does that do? I don't know. It might actually even hurt the negotiations as you look at intellectual property issues.